So from my end, I'm Benedek Orban. I'm the chairman for startups at the Crypto Valley Association. The Crypto Valley Association also collaborates here at CRYPTO2030, and I'm very warmly welcoming our speakers tonight in the panel. So who do we have here and what we'll be talking about? We'll be talking about, and thanks for the intro, Rob, about how to navigate in the Web3 venture space. And it's a very special animal. As said, it does have its own cycles beside the macro cycles, which are out there in the investments. It has its own little cycles, own little tricks. And we are actually nearing a point where a couple of evolvements have been happening in the last, let's say, 1 or 2 months, which might change a big sentiment. And we are here actually to discuss what changes, how to prepare, what to do and what not to do. But keep in mind, nothing which you hear here is to be taken as financial advice. Good. So let me start off with introducing our speakers. Left to the right, we have Daniel Diemers. He's co-founder and chairman of the SNGLR Group. I'll let him introduce himself longer, but I just want to tell you that Daniel has been here a couple of times already in Davos, and one thing he's famous for, or he does snowboarding, he actually broke both of his legs here in Davos. So this is actually, I hope when you go down here, you don't hurt yourself. Next up, we have Annika Kessel. She's the co-founder and the board chairman of Cosmiq Universe AG. She's a nature lover. She lives in an old farmhouse in the Swiss mountains, in a valley with river and forest. And amazingly, from there, she actually did her NFT launch and produced avatars with her team and drives their own AI product. So it's super, super interesting. Last but not least, on my direct left, I have Julian Picque, Group CFO of Chiliz and Socios.com. And an interesting fact which I found out about Julian is that he used to be a professional diving instructor in Polynesia and gave up his career, come back to crypto and come here on stage for you. So put your hands together, please, for our panel today. So let me start off with a brief question. Could you briefly introduce yourself a bit more, what I did, and also tell us about one vertical in the space now that you're currently most excited about? Who wants to go first? Maybe ladies first. How about Annika? You take it the shot.
Hi, good morning. My name is Annika. I want to pick the one word first. This is the merging of IRL and virtual in the space. And I've been in tech industry and building companies for the last 15 years. I came from Silicon Valley, working a lot with the large corporates 10, 15 years ago. And for me, the community spirit of Web3 space is amazing. Building in the space, we launch our NFTs in the crypto winter. Our avatars have now hundreds of thousands of followers, Speak UN Associated, COP28, etc. And we have, next to launching the NFTs, entering the crypto space, been very well received. Because we're focusing on the human side of things and spreading empathy, compassion, and the in real life combination. So we're launching a community manager, which is an AI product for a new way of humans to interact, because as soon as communities scale, it becomes complicated. You know, all these Telegram groups with thousands of people all of a sudden, and AI is going to help us humans shift, and doing that in the community-based crypto space is beautiful.
Amazing, cool. Happy to have you on board. Daniel, you want to go?
Yeah, I can only support what Annika says. I mean, crypto is exciting. I'm probably one of the biggest fans of crypto, but what Web3 changes is it's much more human, it's much more playful. It will very likely attract also the new generations. Surprisingly, it's not like the Gen Z and the Gen Alpha are all crazy about Bitcoin. They're not. That statistics show. My personal journey, I think, interestingly, from tech to human, I was really a super geek. Young age, I coded like hell. We were roaming the internet before World Wide Web. We had a global community, so you knew people, but you only knew them by their handle. So it was totally anonymous, but we had big bonds, big friendships. It was really exciting. And then in the 90s, I did a PhD. That was one of the first PhDs on the topic of virtual communities and how can trust build on that. Of course, I was in a way, for me, it was easy because I just took the experience from the last 10 years. I did that in St. Gallen at the MIT. And fast forward to today, I think with that metaphor Web3, a lot of this humanness comes back in a very wild and diverse fashion. And of course, all of us are investors in this. And this is probably interesting for most of you. How can I actually benefit of that, right? How can I make the ride with Bitcoin? It's simple. You buy Bitcoin. I think with Web3, it's much more complex. How can I be part of that?
Amazing. Cool. Julian?
Yeah, so hi, my name is Julian. As you will guess from the accent, I get it out of the way, I'm originally from the French part. Outside of being an ex-professional diver, my background is mostly in M&A investment and VC. Today I work as the CFO for Chiliz. Chiliz is a Web3 company dedicated to the sports and entertainment industry. Our motto is very simple. We wanted to transform passive fans into active fans using the power of Web3 technology. What does that mean? It's instead of just being completely passive in the way you enjoy your sports, you can be rewarded for your fandom and the energy that you give to your team. The way we did that was by creating what we call fan tokens, which act as Web3 membership. This has been proven to be quite successful. We have onboarded over the past 3-4 years 150 teams, the Barça, PSG, Milan, Manchester, you name them, a lot of football entities, but also rugby, tennis, and F1 entities. And basically what the fan token does, it gives you the ability to vote on some life aspects of the team, be rewarded for the activation or the activities that you have with your team. And we just passed 2 months ago over 2 million users. So I said that there's been quite a resonance into the fan market. And to finish with, we also moved a year ago to a more ecosystem mentality, moving from a layer 2 protocol to a layer 2 blockchain to a layer 1 protocol. So inviting others to come build on the Chiliz chain to benefit from the IP that we have built with the 150 partners now.
Okay, wow, amazing. Let's make the deep dive. So we'll be talking first about investor behavior and how the market shifts and how investor behavior reacts in the specific different market conditions. So with the approval of the recent Bitcoin spot ETF in the US, so my first question, and you can just take it, those two questions together when answering. So how do you anticipate this happening? This approval will reshape the behavior of the investors and the investor strategies? So what's the impact there? And my second question is, generally, how does investing and allocating during bear market differ from bull market? Are there any notable differences which you could point out?
I can go ahead. I think just to briefly go on what Vinet mentioned before, the panel before, ETF, you have to be, if you're a real crypto one, not your keys, not your cons. So ETF as well brings a lot of benefit to the industry. I believe it's giving us positive lightning from different regulators, especially the US one, which has been not very pro-crypto, let's put it this way. So in terms of the overall industry aspect, it's a very positive move, but that doesn't change the fundamental of crypto. It's just going to enable a bit more the adoption, or at least to demystify the bad reputation that Bitcoin might have in the past. In terms of the technology itself, ETF has not changed anything. It's just a better way for people to get accustomed to the asset in itself. To your second question, I think we can deep dive for a long time. There is a lot of difference between a bear and a bull market in terms of the valuation, in terms of the way the team start pitching to you, and in terms of what they're really trying to solve. But
yeah, we'll go into valuation and those topics one by one very much. But thanks very much.
Yeah, it's a very exciting development. It feels a lot like maturement. The space is maturing. It's also amazing to see, and I was even surprised how stable actually the development is, and that we don't have these crazy jumps right now. Because everyone was like so hyping this decision to be made, and it shows maturement, that it's going just steadily up and not shaking all around. It is a very big difference being as an entrepreneur in the crypto winter or now preparing for the next high or being already in the rise. I can say this for myself. We launched in the very winter of crypto our NFTs, and we're a community of investors, more than 50 shareholders in the business, and some already lost money in staking, and it became difficult. That was November 22. And all of a sudden, as an entrepreneur, you have to have a very strong nerves and courage to follow your strategy, because people starting to psychologically freak out, and then people are mad at you, like your NFTs, that's the wrong strategies, it's never going to be that. And so over the time, you develop a very, let's say, a centered ability to follow your strategy independent of the psychological, let's say, movements all around you, because it's when you work with a lot of stakeholders, you can feel really the fear of individual people being thrown at you if you're in the space, and you have to navigate through human emotions a lot, being an entrepreneur in the space. And with everything when you build, I think one of the key success factors is to being able to go through the hypes and the lows with a kind of a steady emotional state, including the team, not pivoting too much because of people's individual opinions.
Yeah, I just want to add two challenges to you as the audience. I know we have a lot of crypto and Web3 fans here. I think despite the ETFs, the volatility will not go away. I think volatility has been in this market since the beginning. It was said on the panel before. In the end, it's just supply and demand. There's no real underlying value in crypto. This may change now in Web3. There's nothing you can fix it with. There's no asset. So the volatility will stay. I mean, many don't even remember. Our brains are very short-wired. After the WEF Davos 2020 here, I think a month later, Bitcoin dropped to $4,500 or $4,000. I mean, super low. Did anyone buy there? Very few people did, right? And now that we're a bit on a rise, I'm getting like calls left, right, and centers and journalists. And again, everyone's on I heard it's going to grow to 100,000. So unfortunately, it's a lot of this volatility, and it's not going to go away. But I think we all know that, and I think we always need to get the message out. I'm on the board of a bank, and we do crypto. We always tell people this is a risky alternative asset class, such as VC and private equity and gold and whatever. This is point one. I mean, point two is maybe a bit even more controversial. I love adoption, right? I love adoption. Yes, I'm a geek. I like Satoshi's white paper and all the beautiful technology around it and the mining. And it's beautiful. For tech people, that's beautiful. But the majority on this world, they don't give a shit about that. And that even that notion, not your key, not your coins, I think that's rubbish. This is really for those people that are super maximalists and super techie. But if we, as the ecosystem, we want adoption, that's not the way. Right? Less than 1% of population in the world have crypto. Do you think the other 99% will want to learn how to operate the wallet and what a key exactly is? I mean, look at shares. There was a time when stocks were a piece of paper that you had to hold in a vault, and the paper was actually the share. Back then, you probably said, well, not your paper, not your share. What happens now? Does anyone have a paper share in their, let's say, bank account? Someone takes care of that, right? They custody it, they put it, you see it in your online banking. Okay, I got this share. And same is going to happen with the crypto. And that's why I think the ETF thing is just beautiful. It allows a big part of the other 99% of world population to get into that. And personally, I don't think we should all try to educate them in opening up, ledger wallets and all of that. So I think it's an exciting time, very positive, but the volatility will not go away, and it's going to stay very exciting.
Thank you very much. Very insightful, and pretty much this echoes with the previous panel as well a little. So moving forward, I'm actually pretty interested. Like, we do see the US and actually global jurisdiction and regulatory scrutiny happening, and this causes uncertainties. There are still many of them. And how do you feel? Are projects and founders relocating from the US? And if so, where do they move? From my experience, let me add just one as having the startup working group in the Crypto Valley Association, we experienced that from the small to even to the big, large protocols decide due to the uncertainty experienced in their specific jurisdiction, could be US or even APAC, they move, and where they move, I mean, we sit in Davos, so I can't say it. They majority of them move to move their assets and even their teams into Switzerland. What's your take on that? Maybe just a short run. Do you see like this kind of movement into safer jurisdictions, or is it like everything stay calm and stable?
Yeah, I can maybe start. I mean, I used to be the head of blockchain at PwC, a very big, large, reputed company, and 80% of my work was always something around regulatory. Big corporates, but also ambitious startups, they seek stable regulatory environments. They don't want to have crazy regulators, and no offense to any Americans. What the US has done in crypto regulation in general has been always very volatile. I mean, there was a time we here in Switzerland, we were rejoicing because over there is just chaos, and we just got calls to the Crypto Valley Association. Everyone wanted to set up here, and that's been continuing. So I think having stable regulation, which places like Singapore have, I think Hong Kong is very sought after, and Dubai, Abu Dhabi, soon maybe also Saudi Arabia are really stepping up their game. Still probably a far stretch from what we have here, for example, the Swiss Crypto Valley. I mean, we, the community, we worked hard with our politicians. We educated them. We pre-wrote, actually the whole law was written by us, the ecosystem, not by someone in Bern here. And maybe that's the way. So really partnership between the experts, the ecosystem, and the politicians who have to sign it off. That's a really good blueprint how you can establish a very safe and stable place for good business, and hopefully will attract many more startups here.
Interesting.
Yeah, I would agree to that. Specifically, being around in the industry across different geographies in the world, you can feel that there is movements to Dubai, to Saudi Arabia. This is still in the baby shoes though, and working on preparing an own token launch. We were considering Dubai, and then I think it's incredible the work that people have done in Switzerland the last 10, 15 years. Now being there, in any event you go to, you meet several entrepreneurs who say, we just moved from Australia, we just moved from the US into the crypto ecosystem in Switzerland, which is amazing because we're onboarding incredible intellectual capital and companies due to a stable regulation. I think what plays into the game also is the geopolitical kind of, it's inside the European Union, but it's not. So I definitely find it very exciting after having seen and been in Silicon Valley growing, really seeing an equivalent being built up by incredible teams, people with a great spirit around Zug being the crypto value in Europe already, and really building out the framework for more and more people to join, being right in the middle here. So amazing.
To continue on Switzerland, and then before moving to Europe as well, I think it's outside of the regulation, which has been indeed very smartly drafted and also embedded for the past few years, is also you cannot erase, because people now are talking about MiCA, so digital passport in Europe, and people are getting worried that it will impact Switzerland. It will to some extent, but what you have to realize is that you cannot erase 10 years of experience when you have people that have come to work and that have built the best practices that are leading the industry. So indeed, if you get better framework, maybe in MiCA to some extent, Dubai and Saudi have doubts. For the regulation, for capital, it's a different discussion, but for regulation, they're not there yet. Switzerland has really built a lot of practices that are going to stay and remain, I believe, at the center of Europe, even though we are not directly MiCA affected. For the US point, the US is always, again, sorry for the Americans, someone already apologized, but I continue apologizing for what's going to be said. Not even going to talk about what they've done in the past when you discuss the way US implement regulation to the rest of the world, but to themselves. Look at FATCA, for example, like everyone has to comply, but not US. So it's a bit crazy when you look at it. It's going to be a bit the same in the US. We still see a lot of Delaware-based company being built and launched in the US, despite the regulation not being very, very positive. To the ones that have moved, especially exchanges. Exchanges is different. It's a different beast. They usually move to more offshore jurisdiction, Cayman, Seychelles, Bahamas, or the usual suspects.
Okay, yeah, very interesting. But not to purely focus on Switzerland, I find it personally very healthy that like Singapore, Hong Kong, like and many other jurisdictions catch up and give more and more certainty, because that's like the healthy competition which actually Switzerland needed. In, for example, as one of the Spitzenreiter, so like the one in the forefront, in order to keep pushing, be more certain, and I think a very nice and healthy environment is building out there with new jurisdictions really catching up. So moving over from the geographical landscape to the appetite of the VCs. So how do you describe the current risk appetite of VCs right today in Web3? And what about the due diligence process? Do you foresee a return of this kind of FOMO investing where due diligence was a privilege and was not like a mandatory thing? How do you see that in the upcoming month?
So if you speak about today people are a bit pissed because they were all expecting, as I mentioned, that Bitcoin will reach 50K to 55K this week. So if you speak about today, people are, in terms of the VC or non-crypto native people, they're a bit pissed. But in terms of the overall narrative, there are two elements. There is still a very strong level of interest from VC. They, sadly, as mentioned, they call you when Bitcoin is at 50 and not when Bitcoin is at 20, even though if their goal is to make money, they should have called you when Bitcoin and the rest of the market was, you buy, Warren Buffett already explained it very well, you buy when it's low, you sell when it's high. It's very simple. Even though VC tend to do it the other way and only come to Web3 when there is a lot of hype. What you have to keep in mind is there is still a lot of dry powder. So meaning people have raised funds and they raise money, but they have not found the appropriate startups to invest in. So what we can expect in the coming months is a lot of this money to be unleashed, let's put it this way, in order to be invested in Web3 startups.
Okay.
I personally have the feeling it's very healthy that people are now digging deeper for substance, because we have seen a lot of NFT projects and a lot of initiatives where it was around white papers and about first prototypes, and now people are really looking into what is the in real life value and application for this world, and who are these people, KYC'd in the teams, what is their track record, what are they actually building. So I think it's a very healthy development, although processes might take longer. There is a great interest, but definitely it's now more of, okay, show me the way, and not just, okay, I'm just going to jump on the train because it's sexy right now.
Mm-hmm.
Yeah, personally, I'm actually quite disappointed with the LPs. So we're a VC fund. We can probably go more into details later. But Annika and I were on Wednesday on a panel at Undavos, AI and Metaverse, and for us there it was obvious this goes together. This is yin and yang, right? There's no either you do AI or you do metaverse. There's no metaverse without AI, and AI will benefit greatly from virtual worlds and everything. Also, our ecosystem is built up around blockchain. The sad fact is that, especially after a hype 1.5 years ago, the whole Web3 metaverse thing became totally quiet. I mean, last year you asked me to bring some numbers. Total investments into Web3 startups by VCs was very low, was $1.78 billion for the top 10 startups. In total, there were about 8 billion. Just to give you a reference, a year before, the 10 biggest startups racked up like 5.7 billion. So 70% drop. It was literally someone switched off the money funnel into Web3, and most of the money went into AI. If you saw the numbers on AI, VC money, it's crazy, right? Mr. Altman, of course, and there's so much happening around AI. But I think as a smart VC investor, our fund, we do also Web3, we have a 8 to 10 year investment horizon, right? And that's how VC investors should think. If you go early stage, your horizon is not 2 years or 3 years. You should really think, in ideal case, there's going to be an exit after 5 years. But you know, everyone who's been an entrepreneur knows there's no miracles, or very few miracles. Yeah. And I think this is a bit disappointing. So we're really gone through a very tough 2023. I personally don't see any signs that it's now suddenly going back into crazy mode again. But I do hope that a lot of the VCs are smartening up and seeing also the beauty of maybe combining investments into AI with metaverse. This is what we do. So we have a quite mixed investment hypothesis. We do anything blockchain, Web3, metaverse, and we do AI, and we have experts for both, and we do smart city, smart mobility. So we really create a broader ecosystem, because if you think of smart cities, and there's a lot of famous projects happening, also it doesn't work without metaverse, right? Because you need digital twins of stuff happening in a smart city, else a smart city won't work. So I think I'm propagating a more integrated investment look at things, but unfortunately, a lot of the VCs are still just going for buzzwords and look at the Gartner hype cycle and say, oh, metaverse, no, I think it was a fad. I mean, I even read now LinkedIn posts by people who said metaverse is dead and AI is the new winner. I wonder what these people have done here in Davos. They must have gone to the wrong bars, on the wrong places. They fundamentally didn't get something around technology. My personal opinion, I may be wrong. Right?
Yeah, amazing. Yeah, I mean, Warren Buffett also said, like, invest in assets when they're like dead or they look like bleeding. So that might be the chance. No financial advice as well. Heading over to, I mean, there are like winds might be changing very soon. Hopefully, this is what I understood from you, Daniel, as well. But how did the negotiation positions of VCs change, let's say in 2023? And what are your predictions for 2024 as we potentially head into a changing winds and into a potential boom market? And let me drop the second one as well. What are your observations and predictions regarding valuations? I mean, are they approaching realism now from top to down, bottom to up, or how do we see the valuations? What do you see in your portfolio and in your target portfolio? Daniel, we want to take
so of course it's very brutal. I've been on both sides, so I had two startups, one big AI startup, we failed totally. So I've been on both sides. Now I'm in the VC chair, and of course it's very, very good for us. It's a perfect environment. I mean, our pipeline gets flooded. We have an online web form where startups can just submit all the data and upload, and we use AI to screen that. So yeah, it's the negotiation power is very high, because just right now it's very, very dry. We feel that, but we also know that's going to change. So now is a good time for VCs to actually increase their allocation if they are liquid. A lot of VCs are also not liquid, so it's not like it's easy right now to find LPs that give money to you as a VC. But the negotiation power is very, very strong. Like with any new technology, you really have to do a good due diligence. That's why we never touch a startup that basically doesn't have own tech and just builds on stuff. That's just our investment hypothesis, because those models are often easily copyable. But for VCs, it's actually a good time if they have money. And of course, for startups, it's super hard because they knock on a lot of doors. And I know a lot of the VCs just don't want to invest or can't invest right now.
To continue on that, maybe the negotiation power, I would say, is still a bit more on the VC side, because by the numbers that you gave, startups are knocking on a lot of doors and they're trying to raise funds. If there were to be a change of winds, as you mentioned, the negotiation power will change a bit, but I hope that VCs and investors in general, they have learned their lesson, and not just to invest in 6 months, because if the entire market goes very green, just to invest because there is the crypto AI Web3 name in it. But sadly, I might be proven wrong, that people don't really learn and just goes for buzzwords. But I believe the investment community as a whole has matured a lot as well. They understand way better the products than before. Long gone are the days where you just do your white paper, you put 3 advisor pictures, and that's it, you raise money. People really want to see concrete use cases, potentially even some user usage numbers. To go to the bottom-up, top-down valuation, bottom-up valuation is very difficult for someone that has not launched a product, that has nothing live yet. So that's only possible for mature or mature-ish companies. Top-down will always exist. That's how VC functions. That you're selling a vision, that you're selling not even a PMF anymore, product market fit, but more a community. What we see is way much more valuation being driven on the community that you have and how you can monetize that community, more than just the number of potential future users. So community-driven metrics are also a good way to look at it from a top-down approach.
Very interesting. Let me just add one more thing on this one, because I'm actually mentoring a couple of startups in Switzerland and also globally. And in Switzerland, a few of those who are aiming to get financed by the Swiss Innovation Agency. And very interestingly, they also talk to VCs and submit their forms to a singular group or and to other VCs. And what they experience very often is they just simply get an answer, if they're lucky to get an answer, that guys, we as VCs, we are currently into raising, and that takes time. That takes a couple of months, might be 2 quarters, to get the LPs, get our raising done, and then we can actually look into you. So as said, the deal flow is pretty much like the pipeline is being filled up. The good quality projects are filled into this funnel and waiting actually for the VCs to raise. So I would really encourage all startups and the entrepreneurs to grind towards the next 2 or 3 months, or even 4 and 5 months, and then we might have, with a different wind, with the halving coming in, have a different position and more traction and more opportunities looking towards VC. So don't give up.
Mm-hmm. Can I add something to
that? Yeah, sure.
So I wish for, and for us also, there's ups and downs in the whole fundraising cycle. Yet there is a possibility, if you have a product and a community that you can monetize and that is growing, and then there's substance between humans and in terms of metrics inside, that we don't just go after the money, because I feel if we look at the state of the world, it's very important that we perceive ourselves, what is the impact we give into the world, and from that onwards, it stops that the VCs are negotiating the prices and we just follow as startups. I think it's about the humans and what they bring into the world, and then we can have the let's say the attitude that we want to as well choose the partners that we are onboarding that can give their money and can participate in these teams as partners almost, so that this whole whoever leads the money has the power thing. I think we're beyond this era a little bit.
I mean,
that's what I wish for in the future also, that the teams have the confidence to do so.
Yeah. There's times I understand from what you're saying that consolidation is coming in, but it still will take time. And as long as we get there, there's still VC power on the top.
And maybe one lesson learned that probably took me 20 years to really dig is there's a magic formula. Revenue is a healer. If as a startup you manage to do any kind of revenue, and ideally not project-based, but from whatever you're really trying to create, it makes your life very easy because there's actual money coming in. You're not that dependent on all your angel investors and VCs. And plus for the VCs, that's always a big tick mark in the due diligence. If you're pre-revenue, and I mean, even here in Davos, so we got in the last 4 weeks so many metaverse business plans of we gonna create a huge beautiful metaverse, and then you get like a link to a spatial demo of that, and they have no users there, no idea how to monetize it, and there's no revenue coming in. I think for these startups it's going to be really, really hard. So I think it's really about getting users, getting a community together, maybe on Discord, and try to monetize it somehow. And the moment you have revenue flowing in, you can really, with broad shoulders, go to a VC and say, hey, let's talk, you know. Yeah. And actually, we always say, as VCs, we say it's a competition for us. For us, it's very hard. We lost a couple of deals. We were just squeezed out by a bigger VC, you know. They look at the cap table and say, who is this singular VC? Oh, no, that's too small. Now we don't want them on the cap table. So they go back to the startup and say, we don't want them. Yeah, but we like them. No, they're out. So actually, there's also a big competition among the VCs. And yeah, if you can make the right bets, talk to the right VCs, you're in good shape as an entrepreneur.
Very nice. So revenue.
Revenue is a healer. That's
is a healer. Okay, we take that with us. Moving towards emerging trends and verticals. What new trends or verticals are emerging in crypto and blockchain scene that you find personally most exciting and noteworthy, nearing like pretty much 2024 and 2025, and maybe a potential start of a bull market?
So I'm not going to answer AI because I think that's the easy answer. The one I particularly like these days is what Friendtech has done. So you can call it social-fi, or what's the DSOC, decentralized social. DSOC is a bit strange, but maybe we come up with a better one. Social-fi, I prefer. So it's the ability that you create community. And it's a decentralized social media. But then where the Web3 component comes in place is that you can use token in order to get token-gated relationship with the different participants. So you need to, any creator on the social media can be rewarded for the creation because his or her followers are going to buy the token or the equivalent token to get the access to the exclusive content that creator is creating. So brings a lot of good aspect in the sense that you can finally more monetize your creativity and more really see from a community metrics, see how you can monetize your community directly. So this is something that I believe is going to grow a lot in the coming months. Not directly in the way of Friendtech did it. They took a lot of shortcuts, but the idea behind, the logic behind that you can have direct reward for what you create and not being dependent on centralized platform is definitely something that's going to grow in the coming months.
Okay, so decentral social-fi. Any other predictions? Any other verticals which you pretty much looking into? We heard, Daniel, from you, like metaverse is something which you think is gonna be hot. Any others which you could mention?
Well, metaverse for me is just the currently used buzzword for a broader trend, which is virtual worlds, virtual communities, humans coming together, maybe in the future with more AI and doing stuff. And I think the magic formula is probably everything about passion. So I fully agree. If you build Web3 around sports, strangely enough, we humans, we love sports. Everyone is at least passionate about something, you know, tennis or skiing or football, or here you see all the scarves of, you know, the Servette Hockey Club from Geneva. I know his heart is blooming already. He sees that, oh, this is my club. So sports is something that people are very passionate. And Annika and I were on a panel with Kelly Vero. She's a 30-year game developer, and even though for most of us adults, gaming is something like, yeah, that's for kids, but that's wrong, right? I mean, gaming brings people together, and increasingly it brings them together in virtual spaces, and it energizes them. And of course, you all know what game developers really can do is not just build these virtual worlds and game characters and avatars, but the gamification. If a game is too easy, you drop it after 2 days. You say, yeah, I just solved it. If it's too hard, you also drop it after 2 days. We say, no, I'm not going to play this level again. So their art is to, how did she say it? She said they were, so she built Halo. Halo is one of the biggest game franchises ever, big part of Microsoft's revenue stream. And she said that what they were told is you need to code this stuff and build this stuff that people never leave the console. Not to eat, not to go to the toilet, just make sure they're just there glued to their console. Of course, that's not nice, but I mean, this is a bit the mindset, how gamers think, and the gamification does exactly that. And I see a lot of that gamification thinking now coming into Web3. And like if you played the sandbox alphas, you know, it's exactly that. You need to find 10 of these, whatever it was, keys, and you got 8, and you got like, do I log out now and then have to do it tomorrow all over again, or I just spend another 10 minutes finding those stupid keys? So this is really brilliant, you know, trying to get people engaged. So I think these are two great trends. If we find passionate topics, or also your topics, Annika, you know, get people around the common purpose, embrace that. This is when we feel human and we feel community, and it's always nicer to enjoy this with other people, even if they're connected just digitally, than to do this all alone, just on yourself.
Yeah, I would like to comment on that. If we look at Web3 from an infrastructure perspective, and as well how people started with NFT projects and then potentially met people they like and started something else, I think we can see this as a huge incubation infrastructure, because a lot of people meet through communities, they start projects and then they pivot, or even we have 150 humans that know each other around the world and 500,000 community followers of the avatars, and from there things evolve that we couldn't even understand understand. So now building AI into this for better matchmaking of humans, I think it's a huge tank for people who trust in technology and start something, and humans meet because of the passion they have, because of the like-minded thoughts and visions for the world, and then you can really create something impactful virtually, and I always call it downloading it into the real world, because we get more and more use cases where we have, let's say, token projects, but with real-world applications. So I think it's amazing how you can use the infrastructure, meeting humans and starting to do something from it that you didn't know half a year ago you would do together because you meet.
Okay, yeah, understand. Very interesting. I would have a very special question. I'm trying to look into your heads as investors, but also as entrepreneur. When investors or VCs look for deal flow, look for information about upcoming trends or specific startups, what are the channels which you look at? How do you build your deal flow? I mean, I understood you've got a forum, but you got to be probably also actively seeking for the next in order to be there as a first arriver, a first comer. So my question is, in the special animal world of Web3, how do you seek, how do you scan, how do you find the best new investments to your radar?
Well, I'm embarrassed to admit it, but it's still probably one of the oldest principles, thousands of years old. You ask a friend. So we get so many high quality referrals from our network. We have a huge network, or 15 people, all built their respective networks, and that just still is like gold. I mean, yes, we get the pipeline full, online, digital. We have our AI screen that even with computer vision, but it's still the recommendation. So what I also then recommend, if you're fundraising, yeah, you can do a huge online social media campaign about how great your startup is, but just tell every one of your friends, do you know someone, do you know an investor, do you know a VC? Go tell them that we're the next big thing. That value is highly valued.
Amazing, insightful.
And same, again, community. Look at the people you trust, create a diverse community, and you will always have the best insights from all the different 360 degrees angles. So we have business angels who major part of their investment in us is to be in a community where they can learn from the different trends like metaverse, AI, how we move forward as humans with the infrastructure of the new technologies. And this is what humans in the end are. We're trusting others who are an expert in something. And I feel because of the information inflow, it's the most important thing is that we connect to people who are the experts. And then we are a big network of experts, and we moved forward because of the trust we have and not just the facts, because in the end, we're emotional beings.
Yeah, very interesting. Yeah.
Same, fully agree. It's maybe an old-fashioned method, but still the best. It's meeting people. What any investor do at some point, unless you're an expert in a very specific subject, is you delegate your trust to another party. This can be one of your friends. This can be because you have won a hackathon competition, or because you have or you have already raised funds before. What you're trying to do as an investor is trying to look for different flags or signs that showcase that you have already built trust with trusted actors. That's the main reason when you're a student you want to go to a big Ivy school or anything, is because if you go out from that school, people believe that he or she graduated from Harvard. If she's good enough from Harvard, she's good enough for us. So you always try to find this type of green flag, because red flag you will always see a lot when you're investing. If you just want to focus on red flags, you never invest anywhere. So you're more like looking to see the different green flags that are going to help you build confidence and trust. And yes, coming to these events, that's one of the reasons we are all here as well, is because it's the power of the community and the referrals that you build in that community.
Okay, amazing. So rounding it up for us today, could you just please give 3 verticals and 3 specific topics which you're interested in? We heard a couple of them, but if you have to say 3, which are the top 3 which you would be looking into 2024 when you navigate in the Web3 space in terms of investment?
So 3-1, so AI has to be one of them. So it's a bit confusing to use different words because they can mean different things. But yes, so it's going to be more on the AI aspect that can exponentially grow the usage of any of the, it's an underlying technology, so that's why it's way more, it's not really a vertical, so sorry for that. Second one will be more moving to the quality of gaming. The best Web3 games that you have today, they are not really good. So what we're getting better on the infrastructure, but the content itself, we're still on 1A, AA games. No one has really built a AAA Web3 games. So I believe that that's what I'm really interested into, is that people are going to go to a game and liking it the same way as we like Halo or any other ones without realizing it's actually a Web3 game. I want the Web3 component to disappear from just the selling point of the game and being an amazing content-driven game that I want to log into because I like it. And then the digital ownership and digital rewards comes as a nice bonus, but I like the game regardless. And last one, SportFi. So being able to better engage with your passion and be rewarded for it.
So SocialFi, SportFi, and blockchain gaming. Amazing.
Yeah,
Annika?
so for me, it's definitely AI enabling humans to navigate even better, more healthy, and well-informed through this world, so that we're using it as a foundational technology for humans to develop to the next level. It's communities. When you look at the world, it's very essential to gather with people that match your values and your identity of what the world is going to be and is today and should be in the future. And then this aspect, and that's true for any industry, but to becoming, to growing the technology for better use cases for this world, we have to work on ourselves as humans, because we saw a lot of things failing in the world and has been psychological approaches, crypto hypes, etc. This is because of the human being. So,
I have to read from the book from our fund, because if I don't do it, my GPs will be very upset with me. So we have two fixed horizontals. It's AI and it's blockchain technology. And the two verticals, one is longevity. Now, many will say, well, what does Web3 have to do with longevity? But there's very interesting use cases there, from Vita DAO, which is a DAO that pools IP in a community model where people can insert IP, get paid for it, and vice versa. Very new and ambitious project. Mental health projects around. So there's a lot of interesting stuff in longevity to look at. And of course, smart city, smart mobility. Smart city is clear, but even smart mobility, think of what you hopefully don't do already in the car, but when you're driving, you should not be on the phone. But the moment your car is driving itself, what you're going to do? You're not just going to sit there and look out of the window, but you're going to be immersed in virtual worlds. So going to be online. So huge space. And my third one, my wild card would be gaming and sports, two areas where you can really, it's all about scalability, right? And there's few places where you can reach massive scale in a very short moment, in a very short time, and that's sports and gaming. And I think these are very important sectors. Yeah.
Okay. Thank you very, very much, Annika, Julian, and Daniel, for this panel. And thank you very much for the audience for listening to us. Put your hands together, please, for our panelists. Yes, and if you have any questions, then you can shoot around. If you need to go.
3 minutes I can do.
Yeah.
Thank you very much. I have two questions. The first question is, what is your feeling? What is the major source of funds coming into VCs to invest in Web3? Is it mainly retail investors, family offices, or big private equity funds aggressively moving in this space? Just your feeling. Who are major providers of liquidity for investments in Web3? This is the first question. And the second one is, all of you mentioned Web3 gaming as one of the potentially very strong trend for the coming future, right? But we have, on the one hand, professional game developers who are developing games, and they occupy a major portion of this market. And we have movement from the other side when Web3 projects, which do not have that much experience, budgets, teams, etc., but they know how to use Web3 technologies, are trying to move to the same field from the other side. Yeah. Why do you think, or what factors you think would help Web3 teams to be competitive with traditional strong game developers? Especially some of them said that we don't want to be in Web3, like Microsoft with Minecraft story and some other examples. Thank you very much.
So I can start with the second one a bit. When you build a good Web3 game, or if you look even remove Web3 endgame. For any product that you're going to look at, you have to look from a tech standpoint at two elements: it's the infrastructure and the content. Web3 here acts as the infrastructure that you need to use to build your game, and then there is the content in itself that comes on top of it. This is what I was saying previously. When you mentioned traditional game, let's call them Web2 games. I don't really like the term. You go to the game because the content appeals you so much that you want to continue playing. But any gamer in the room here realized the pain that you build an avatar, you build your reputation, you invest a lot of money into the game that you play, and suddenly if you want to move to another games, all this money, time, effort that you spent is locked into a centralized game that you cannot move away. So this interoperability that you need to move from one game to the other one can really be provided by a Web3 infrastructure where the assets that you have in your game, they can be transferred to different metaverse and different games. So this is really a superior element of Web3 gaming over Web2. It's a no-brainer. Any gamer that has felt the pain to want to transfer his avatar to another game knows that this is going to be a critical component for the success of any Web3 games. So the infrastructure element and the Web3 superior proposition is here. What we're still missing, as you rightly mentioned, is the content. The games are not appealing enough to really make you go to this Web3 gaming overall flow, if I can put it this way. So for me, what we're missing and what we need to bridge is bringing the good content creators to the Web3 industry to make sure that the games that they build are compatible with the Web3 infrastructure. Because in the end, it's just a question of infrastructure. The content, you can tell, it's about storytelling, a game. The story that you tell is agnostic to Web2 or Web3. You just need to find the right way to plug in the resources to tell the right story onto Web3 infrastructure.
Mm-hmm. If I can add to that, I think we as the Web3 community, we also need to talk to the game developers because I think they missed a few trains. You probably all know Fortnite, right? Fortnite is a super closed system. Used to be, I think, Battle Royale, but now I think 60% of people in Fortnite, they actually use the creative mode to do things similar to Roblox. So it's become a social platform. And what I played Fortnite myself, what the developers totally did, or the decision makers, they didn't get is that they could have made so much more money if they would have built Fortnite as a more open game, where, for example, all the assets, your skins are NFTs. And suddenly you could have secondary markets where, you know, the second season Batman costume is going to be traded for $50,000, $100,000, whatever dollars. So they're still thinking very closed, like Halo does, all of them, all the big franchises. And maybe we need to educate them and show them the way that if you open up, it's and I love both your questions. The first one is very quickly answered. We raised money now from the LPs only, individuals, smaller family offices, and a couple of what I would call corporate venture funds. No institutional money whatsoever, very little fund of funds. For them, Web3 is just way too exotic still. They look at this and they go like, ah. So it's rather smaller investors, smaller tickets, but that one works well. Yeah.
We might have for like a very short last question if anybody has, else we can carry on in the talks. The gentleman down there at the bar.
So because of either the nature of the market, the bull, the bear, etc., or the requirements of the investor, sometimes I find crypto projects raising money in exchange of tokens or equity, or scarily enough both. And sometimes these entities which are issuing the token or the equity may actually be different corporate entities. On the one hand, we have a highly regulated instrument like equity. On the other hand, we have this great token. How do you as an investor see this scenario when there's more than one instrument?
Quickly, so if someone only offering you a token equity or a token allocation into your fund, for me, I will see it more as a red flag than something positive, because you have to then you have to compute the token economics yourself. That they're going to ask you money against tokens, so then you can directly derive what is the price of the token today and what you believe the price of the token is going to become. And that usually looks very bad in terms of the rate of return that you're going to get, because most of the tokens that are being raised today, they are utility tokens, and having an argument stating that you're going to make return because a utility token is going to grow exponentially in value is a bit counterintuitive. A utility token should not explode in value as the game or the project increase. To the second point, you're right. Usually they use two different legal entities, and we have seen people making the big mistake of actually taking the shares into the wrong company without realizing that actually the substance was in the other one. So yes, they're willing to give, and usually you see it very clearly when someone comes to you saying, we're willing to give you more than 5%, 10, 15% of this entity, it's probably a shell entity, and the value and the substance is in the other one. So do your due diligence before investing.
Yeah, and I think it's very essential that you take part in both, specifically when you launch tokens and you have to manage the liquidity pool. We're exactly at the state where so far we have given out equity to investors, and we're looking at how can we now, with more than 52 shareholders in the cap table, which is our community, which is a very strong community, how can we continue growing through people investing in the project, not just moving everyone to tokens, but how can we build the two pillars being valuable sources. So this is not an easy question, but it's very essential to do, to not just have a shell that is too empty, and then others, just because they were early, participating in the entire valuation growth of the project, including the transactional model of the token pool that has more potential when you grow a strong community with transactions. That is something that then just a simple equity investor, not necessarily through a transaction-based model, can participate on. So the combination.
I'm very happy we touched upon a great question, because I mean, this is very special to Web3. Like in Web2, where do you invest into tokens? Like, it's pretty rare. So thanks very much once again for the questions. Happy to carry on afterwards in the discussions.